Welcome everyone to Crypto Wall Street. I'm Charlie Klosko, a former investment advisor in Los Angeles. Now I'm a full-time cryptocurrency trader. I'm sharing my knowledge and my analysis with you here on YouTube. Today we're talking about the crypto market crash, as everyone absolutely has seen. Otherwise, I'm sure they're not crypto investors. And everyone's question is why? Why is the market falling? What happened? What causes this large decline in the market value to just disappear and just go down like a skiing slope, just constantly with a solid speed going down? What causes it? We will take a look at that today. The market has, over the last 30 days, gone from $615 billion total market cap to $430 billion. It is a loss of more than 30%. But why is that? What happened? We'll take a look at some of the potential reasons for that today. Some people talk about China, Chinese New Year, futures, Chicago Board of Exchange. Some people also talk about the dollar exchange rate. So we'll take a look at all those things right now. One of the first things I wanted to take a look at is the market capitalization based in dollars, because there's been there's been talk about the dollars being depreciated as well, meaning the dollar losing value, which has caused the market to go down. So let's take a quick look at that. So what I did was that I went to Bloomberg and I compared. Let's see, remove this one. I compared the US dollar to a number of huge other currencies, fiat currencies, to see how the dollar has been doing over the last 30 days. So I compared the US dollar to British pound, the Swiss franc, Danish crowns. It's not so relevant, I just added because it's funny for me. Australian dollars, Canadian dollars, and Chinese yuan, or how you pronounce it. I apologize for not pronouncing it correctly. So what we see here is that this graph tells us how much of the foreign currency we need to buy $1. And as you see, it has been declining, meaning you need less of the foreign currency to buy $1. As a result, it means that the US dollar has been weakened compared to a number of these huge currencies here. It has depreciated from anywhere from 2% to 6%. So let's take a look at that. So thinking that the US dollar should be able to affect the cryptocurrencies anyway. Let's think about it like this. Let's say we have X coin here. This is just a random cryptocurrency coin. And it's worth, it says on coinmarketcap.com, it's worth $1. It costs $1 to buy it. That's the price for one coin. Okay. Now, assuming that over the last 30 days, the value of the dollar is depreciating, meaning it's worth less. Given that X coin, everything about it, that the perceived value of X coin itself, the corporation, the firm, and what they're doing is fixed, it should in theory mean that you should be paying more dollars for that same coin because the dollar is worth less. And if you want to buy the X coin here that's the same value as before, you should actually you should in theory be paying more dollars. So it could be $1.10 or whatever, right? That's what should happen in theory. But by comparing, let's see, this graph I took from Bloomberg, with compared all the exchange rates here from the major fiat cryptocurrencies. I took that, and then I took from coinmarketcap.com. I took the market cap, the total market cap for the last 30 days, and I took it out here. So what we're actually looking for here, what should happen in theory, was that when the value of the dollar goes down, meaning depreciates, the value of the coin in dollars should go up, right? In theory, that's what should happen. Maybe that's what's disturbing the market. So let's take a look at that here. Here the graph is. So we should be looking for any inverse relationship here. And I don't really see that. You know, what I see is that from the beginning, from over the period that the total market cap has been going down, and so has the value of the dollar, meaning it's weakened over time. So that really doesn't make any sense. You know, I would even say there's a slight correlation. Something goes a little bit up here and up here, goes down here, slightly up there, down, up, down. Nothing really to comment on, but there's definitely no inverse relationship between it, because in that case, the market cap should have been going up instead of down. So I personally wouldn't think there is anything in that, and there absolutely isn't, because cryptocurrencies are also valued in Bitcoin. You know, as a matter of fact, the dollar price here is simply just a weighted average from the different exchanges that the coin is traded at, converted into US dollars. And as I just showed here as well, the US dollar does not affect the price of the cryptocurrencies in any way. So that's not a potential candidate, in my opinion, to have affected the cryptocurrency world here over the last 30 days. So the other thing to look at is Bitcoin, because as we see, if we take Ripple, for example, or whatever other coin it is, all of the coins are valued in Bitcoins as well. So they're also, it's like the gold standard for the cryptocurrencies is Bitcoin, because they're all valued in that. So that's interesting to look at as well. So taking a look at that, let's see here, I'll move this graph up here. Let's go back in here. So let's just change this. Let's just say, so B stands for Bitcoin, and let's just change the example, go through that again. So assuming that X coin here, whatever cryptocurrency, is valued at 1 Bitcoin, okay? We can also put it this way, it's easier. 0.1 Bitcoin. So some random coin at coinmarketcap.com is valued at 0.0 Bitcoin, all right? The value of Bitcoin goes down. Let's presume the value of Bitcoin goes down over 30 days. What should potentially happen to the price of the X coin here? You mean the Bitcoin price for X coin, given again that the value of X coin continues, nothing has changed, the perceived value of this operation is absolutely the same as always, nothing has changed besides the value of the coin here, Bitcoin, that you're purchasing the other coin for. In theory, as before, if the value of the Bitcoin goes down, the X coin, given that the price, the perception again is fixed, the Bitcoin, put it here, 0.1, you should actually see an increase in the price of Bitcoin to purchase this coin, because the value of Bitcoin would go down. So in order to equal Bitcoin, to purchase the coin, you should be able to actually have a larger amount of Bitcoin to purchase X coin. Let's see if that holds in theory. So to test that, what I did was that I took over the last 30 days, I took the graph here from the development of the market cap of Bitcoin only. So this is only Bitcoin development over the last 30 days. And down here, we have the market cap of, so the market cap of all the other cryptocurrencies, excluding Bitcoin. And what we should see, in theory, was an inverse relationship that when the Bitcoin value of Bitcoin goes down, value of all other cryptocurrencies should go up, and the opposite as well. So if it goes up, Bitcoin goes up in value, the price of all of the coins in Bitcoin should be going down. Let's see if that holds here in theory. I do apologize for the two graphs. They look very much alike. I should have changed the color of one of them. I'll remember that for another video. So up here we do have the Bitcoin market cap, and down here we have market cap without Bitcoin. So what we should see is an inverse relationship, and let me just move them closer so we may see if there is an inverse relationship in any way. I'll let you look at it for a second. I don't know about you, but I do not see any inverse relationship, meaning that if Bitcoin were to go up, the market cap should be going down because the prices of all of the others should be going down, but that is not the case at all. And I do say we do look at the market cap here because the market capitalization for each coin is a product of what? Circulating supply, given that's fixed. The circulating supply would be the same, and we multiply the circulating supply by the price of the specific coin. As a result, when Bitcoin price should potentially should go up, would go up, the price of the cryptocurrency should go down, and as a result, the market cap as well for those coins. That's why we're looking at this one, excluding Bitcoin. So we should see an inverse relationship in theory, but again, I don't see it here. The only thing I see here that's a little bit different is that when Bitcoin went up here early January, all the cryptocurrencies went a little bit down. And besides that, other little variation here you know, the concept of both graphs here are the same. You know, we have a concept going up here, down, down, Bitcoin, market up, Bitcoin up, slightly down here, Bitcoin, market down, up, down here, little up, down, down, up, down, up, down, up, down, you know, all the way through. So again, that is neither an explanation, and I'll tell you why right now. Why is it that there is such a, like a 90% correlation between the market capitalization of Bitcoin and also the rest of the cryptocurrencies? And of course, it has to do with, in here, with Bitcoin making up 30% of the overall market cap. But in here, I did exclude it. It's the below this one here does not have Bitcoin in it, so that should not count as a factor. So what is it then? Well, I'll show you right now. It is absolutely, the answer is in here. Clicking at Bitcoin, because what is the price of Bitcoin? In Bitcoin, it is exactly 1 Bitcoin. Yes, so that is the fixed currency for Bitcoin here, because the price of 1 Bitcoin is Bitcoin. That is not going to change, and that is why we see a like 90% correlation between the market capitalization of the rest of the cryptocurrencies compared to Bitcoin. It is because Bitcoin is much more stable compared to the dollar, and you see that in here. If you go to any random, go about here again, any random coin, if you've noticed, wait a second here, let's just take Ripple again as an example. I do not hide that I do like Ripple. I'm not promoting it, I'm just a fan of it. Let's see here, it's loading, come on, here we go. So if you go in here and see, the interesting thing is that, okay, this is the dollar price, it has a decrease, it's fallen 25.5%, but in Bitcoin it's only fell 13%, and it is because Bitcoin is less volatile, it is more stable, but it has changed in price here. Why is that? It is because Bitcoin has changed in value as well. So it is a bit hard, absolutely, to figure out when a coin is going up or down. Is it really the change of the Bitcoin, which is kind of which each coin is pegged to, connected to, or is it actually the value of a coin itself? And that's definitely a little hazy to look at. So neither there in the connection of Bitcoin is there anything I would say to put a finger on. But then you could think, well, if the rest of the market is connected to Bitcoin, what makes Bitcoin change value then? Because apparently there's a 80-90% correlation between Bitcoin and the rest of the market. So what has affected Bitcoin? And Bitcoin is very more important. It's much more important than we actually think. I think we keep forgetting that it makes up 30% of the overall market cap. It is in itself a whale to control the rest of the market. So moving on to the next point, which is CBOE, the Chicago Board of Options Exchange, who have offered Bitcoin futures since mid-December, and I'm sure a lot of you have heard about it. There's been a lot of YouTubers talking about it as well. I'm not going to go into too much detail about it, but I'm going to mention it and my thoughts on it here. So going to CME Group, which are the ones who actually offers the futures, you see that the settlement date for the first futures were January 31st, which was yesterday, and they were bought from December 15th to January 26th. And I'm sure you've seen this date here on a lot of videos on YouTube, because that was when the last trading day was possible for that first future. But there's a lot of other futures as well. We see here there are futures that are trading right now from December 15th to February 23rd, ending on 28th of February, ending on April, May, and July. So there's a lot of futures coming up here that are already being traded. And what we see is that it was introduced, the futures, the Bitcoin futures were introduced in mid-December, meaning that's where the traditional world of investing started having a larger impact on the prices. And why is that? Well, there's a lot of talk, there's been a lot of talk about institutions wanting to go into Bitcoins and other cryptocurrencies, but it's a problem from a legal point of view as well, and the SEC here in the US have a lot of problems getting financial institutions to approve their investment products, so regular investors can invest directly into cryptocurrencies, and for the institutions as well to do it. So a way to start to actually make money from cryptocurrencies is to do futures, which has been approved in the US as the only place as far as I'm concerned. There may be other places, so please bear with me if I'm not updated on that part. But there are futures on Bitcoin available, meaning that you can now, as an outside investor of the cryptocurrency world, invest in and speculate on the prices of Bitcoin. And that is exactly what has been going on here. And there's a lot of speculation as well that this is what has been driving prices down, is because there's been a tremendous amount of people who shorted the market for the futures, meaning they were hoping the price of Bitcoins would go down. And we did see the price of Bitcoin going down. Let's see, where is it here? Bitcoin going down from, let's see here, from start of January until a couple of days before the contract expired. So let's see if it loads. Well, it doesn't matter. So we did see that, and some people believe that a large amount of investors are manipulating the prices of Bitcoin, and it is very true that there's a high chance they can do that. If institutional investors are buying a large amount of futures here, they do affect the prices to a very large extent as well. And not to say the problem, but the matter of the fact is that there are more futures now, and since they're introduced, they are now a player in the game that will affect the cryptocurrency world again in the future. So it's something to keep in mind for sure. And the next date to look out for is February 28th. That is the settlement for the next portion of futures here on CME. Final thing to look at is the Chinese New Year's Eve, and I do think, to be straight out for you, to be quite honest with you, I do think that it has some effect on the market as well. I wasn't much aware of what the Chinese New Year was, so I looked it up, and this website explains it pretty well. So for those of you who isn't aware, I'll just go through it quickly. Chinese New Year is one of the most important holidays in China. The annual national holiday allows residents of China to take at least a week-long break. The dates vary each year based on the lunar calendar and normally falls somewhere between January and February. This year it falls on February 15th to 21st, 2018, and the exact New Year is this year, February 16th. And why does it matter? Here comes the interesting thing. In terms of shipping, it says that vessels they're filled. If you want to have something shipped out there, you have to do it well in advance, because there's going to be, vessels are they are too filled, as I said, so there will be delays. And the same with factories here, as it says, factories can shut down from anywhere between 1 week to a full month, and as workers travel across China to visit family. And this is very important to keep in mind, because just think about it, in China, there are really, really few unions for workers there, if they even exist. So for a holiday to be that important for the Chinese people, that factories shut down and the workers are actually able to travel across China to visit their family, is a huge thing, meaning Chinese New Year's is a very, very big thing, and the whole country is more or less shutting down. And it also affects the trade as well, and since China is a huge component of trading as well, it does affect the trading volume, meaning also the flow of money in cryptocurrency space, and thereby affecting it. So I wanted to point that out to you for sure. And it also says here delays after CNY. CNY is the Chinese New Year's Eve. After the holidays, every company sees a domino effect as they try to pick up a momentum. So even a couple of weeks after, we can expect a slow beginning or slow start from as an effect from the Chinese New Year's Eve. I was pretty curious, so I went in here. Let's see here. In here, there it was. No, let me just find it. Hold on. So this is what I did. I went in here to coinmarketcap.com, looked at the total market capitalization. I was wondering how the Chinese New Year's Eve has affected the market previous years, because I did hear from someone or read somewhere online that, oh, this is the Chinese New Year's Eve, this is what happens every year around this time with the cryptocurrency world, the cryptocurrency prices. So I did want to check it out. Just went in here and then looked up the Chinese New Year's Eve dates for the previous years. Let's see here. So in 2015, it fell on February 19th. So let's see here. Let's move this one a little bit forward. Here we go. February 19th. That's here. And then I was a little curious. So I found the date of the New Year's Eve, and I looked forward 3 weeks. And for 2015, 3 weeks forward from the New Year's Eve, it increased the prices. The overall market capitalization here increased by 20%. I did the same for 2016, where the New Year's Eve was February 8th. And the following 3 weeks there, the market increased 20%. I did the same thing in 2017 here, where the New Year's Eve was on January 28th. I don't know why it's not loading. That's a little annoying, but anyway. So 2017, January 28th, what's New Year's Eve in China? 3 weeks after, the market has increased 14%. So the last 3 years, it indicated that there is an increase right after Chinese New Year's Eve and the 3 weeks following that. So it is likely that we will see something like that this year as well, for sure. I'm optimistic and do think that, especially because we've had such a rough last 30 days here. And I don't think we're over it. I'm sure I believe that the next couple of weeks will be rough as well. We will see the market keep bleeding, going up and down a little bit, but we will continue to see the market cap being pretty low compared to what we've already seen. But after that has done, after the New Year's Eve is over in China, I'm optimistic and think we will have a very nice spring here, starting end of February, with the prices and the market capitalization starting coming back. That was my opinion, my perspective, my take on why the market is going down. Whether you share the thoughts with me or not, it's entirely up to you. Just want to make sure that I shared it with you so you can take from it what you want and become better investors to understand what's actually going on here. So the good question, or the next question, is of course, what's going to happen next? Went from 6:15 to 4:30, but Charlie, where are we going now? Is the cryptocurrency market over? Is it ending? Is it just going down? Has it been overvalued? What's going on? My take on that is that we will see a very promising spring here for a number of reasons. As I pointed out in some of my previous videos, we do see a lot of ICOs coming in. We have a couple of 100 ICOs coming in to the market over the next couple of months, actually. I pointed out that Venezuela as well is launching their cryptocurrency coin. They're starting the token sale, pre-sale here end of February, meaning that it will now become aware to the rest of the world governments that there is a future in the cryptocurrency for the governments as well. So I expect a lot of money will be pumped into the market there. And again, once the market starts having more confidence, or in other words, when people that are investing are having more confidence because the purchases are made by people. So when we as investors are having more confidence in the market, we start pumping more money into it. And then I'm absolutely sure we'll see a very nice spring for the cryptocurrency market. That's what I have for you today. If you haven't already signed up for my investment newsletter, make sure to do so to receive valuable market analysis and also cryptocurrency coins, recommendations, ICOs, investment tips, and all other good things for you as a cryptocurrency investor. There's a link below this video here where you can sign up. Also, stay current with articles and other stuff that I post on Twitter and Facebook. There are links to those things as well below this video. And with that being said, I will see you around.